Okay, quick recap of my trade today, February 12th, 2025. I thought the market was going to go up, so I bought a call. Strike price of 601. Call, February 12th, 2025. I bought 25 contracts total for an average price of 97 cents each. And I bought it at 9:33 a.m. today, February 12th. And I sold them at same contracts, 9:39 a.m., 6 minutes later. All 25 actually got stopped out. $1.28, so the price of it went up. My stop price was $1.29 here, but I got stopped out a cent lower. So I'll go to my watch list and find SPY, what I traded today. Go over to the left and look at the history. It's nighttime right now, so that slightly gray area is aftermarket. Just slightly gray area over here is pre-market. So February 12th, today was a big news day at 8:30. You had a news come out, CPI data. It was worse than expected. So it dropped pretty big from $605.73 to $598.23. So I played a couple of technical indicators like the Fibonacci retracement, because sometimes when it drops so quick and so hard, it tends to be similar to a rubber band and kind of bounce back up. Same way a rubber band, the elasticity of it makes it recoil. So I played a call to the upside because I thought it was going to go up. And as you can see, it pretty much did the entire day. So I'll zoom in. And place my vertical lines to where I got in and out. These are 1 minute candles. Why it does that, I don't know. So I need to slide this vertical line over. So 9:33, that's when I got in. $9.39, that's when I got out. So in 6 minutes, I made over $800. Got stopped out. As you can see, price dropped below these moving averages correlated to price, the history of price. So those became resistance once the trading day opened at 9:30 because it dropped below it, and it was working as support before, this long red candle, because of CPI data, was not so good. So my idea was that it was going to bounce back up and at least come here and hit this red line and go down. It did go down, but not as far as I thought it would. And it pretty much kept going up. So the data for CPI, it was bad, but it wasn't horrible, or else you would have seen like a continuation in price going down. So I made $800 in that short time frame, 6 minutes. I could have made at least another $800 off of this move right here if I would have waited like I planned. But I had to take my family to the urgent care, so still a good day. And as you can see, even after it pulled back, it kept going up. Once it got here, the price would have increased as well because it's higher than here. And it even peaked out right here. So I bought it at 97 cents, 25 of them. But by the end of the day here, it was actually worth $2.40. 1.5 times what I paid for it if I would have held it all day. But see, I was expecting it at least, if not here, at least here to come back down, possibly to this pre-market level of 598.23, but it didn't. It held up, leading up to the CPI numbers that are going to come out February 13th, 2025 at 8:30. So basically it came back up to the red line like I thought, bounced off of it because its resistance is like a ceiling. Resistance is like a ceiling, so it bounced off of it, came back up, pulled back, tested that resistance, which is now becoming support, popped up, broke that support, but it didn't fall much longer, came up and stayed above that red line pretty much for the rest of the day. It got below right here and right here, but pretty much respected that red line after it came back up here. So like I said, these are 1-minute candles. So each candle represents 1 minute, and then the next candle start. So I'm going to try to keep this video short. So last thing I want to show you is, as you see, I got stopped out at $1.28. and made $800 from buying it at 97 cents. But look at this price by the end of the day, $2.40. So if I would have held on to this all day, or not even all day, until the peak, when it reached like 604 and some change in the spot chart, I could have made 1.5 times my money. So $100 would have turned into like $240. $1,000 would have turned like into $2,400. $10,000 would have turned into 20,000, and so on. My math's a little off. Just early in the morning. It's like 1 o'clock in the morning, pretty much. But you get the picture. So you only can get those type of gains in the stock market. Whether you invest in long term or short term. So that's what I like about day trading. Just the potential of it to make 100%, 50%, 25%, or 300%. Speaking of 300%, I did have one overnight play. Just one contract, one spy. It was a put because I knew the CPI data was coming out at 8:30. It just had a feeling that it was going to go down the way it was running up the day before. So only played one contract. It cost like $30 and some change. Just about. So as you can see here, that one contract, a put, because I thought it was going to go down. Buy a put in options, stock options. You buy a put when you think the stock is going to go down, and a call when you think the stock is going to go up. Call, like pick up the phone. You think it's going to go up. Put the phone down. You're hanging it up. You think it's going to go down. So I bought a put and made over 300%. I cashed that out when the stock market opened at 9:30. So, like I said, you only can get those type of gains in the stock market. Making 10%, 15%, 75%, 150%, 300%, or more of what you put into it. $1,000 would have turned into $3,000. $10,000 would have turned into $30,000. With a move like that, if you know what you're doing. So that's what I like about trading. That's what I like about investing. You don't see those kind of gains just letting money sit in your savings account. So, but yeah, we're gonna try to run them back again tomorrow. Have just as good of a day, if not better. PPI data coming out tomorrow, Thursday morning at 8:30, February 13th. So that's pretty much it. Happy trading, and I'm out.